Today, many people are obsessing over XRP's price, watching charts every hour, and reacting emotionally to short-term movements. But according to a respected crypto expert, this obsession may be causing investors to miss the bigger picture. While XRP's price has struggled in recent months, its real value may not be found on the chart at all, but instead in what the technology actually does in the real world. So in this video, we are going to break down why XRP's recent price drop might not matter as much as people think, what experts believe truly drives XRP's long-term value, and how real-world adoption, institutional interest, and utility could shape its future. And most importantly, we are going to explain how focusing only on price could lead investors to misunderstand XRP's true potential. So, why are people so focused on XRP's short-term price movements? Over the past few months, XRP's price has clearly struggled. In the last month alone, XRP dropped by 16.45%. And over the last 3 months, losses deepened to 34.2%. 34.2%. December was especially painful, with XRP falling roughly 16%, leaving its price hovering around $1.84. Naturally, this price action has caused frustration among investors, many of whom took to social media to express disappointment. However, it is important to understand that XRP's decline did not happen in isolation. The broader crypto market has also experienced a downturn, affecting multiple assets across the board. Despite this, XRP holders appears especially vocal, largely because expectations around XRP's long-term role in global finance are extremely high. The market impact of this emotional reaction is significant. When investors focus too much on short-term price noise, it often leads to panic selling, increased volatility, and a distorted view of an asset's true value. This behavior can temporarily suppress prices even further, creating a feedback loop driven more by emotion than fundamentals. So, who is Versan Aljarrah and why does his opinion matter? Versan Aljarrah is the founder of Blackstone Capitalist, a firm known for its macro-level analysis of digital assets and financial systems. Unlike many commentators who focus on daily price action, Aljarrah takes a long-term and utility-driven approach to crypto valuation. This perspective gives weight to his argument, especially during periods of market uncertainty. According to Aljarrah, the market's obsession with XRP's short-term price movements is misplaced. He believes that this constant focus distracts investors from what truly gives XRP value. While he does not deny that price matters, he argues that it should not be viewed purely through a speculative lens. The market impact of voices like Aljarrah is subtle but important. When influential analysts encourage patience and fundamentals-based thinking, it can help stabilize investor sentiment and shift attention back toward long-term adoption rather than daily price swings. So, does it mean that XRP's true value lies in its utility? Aljarrah emphasizes that XRP's true strength lies in its real-world utility, not in short-term market speculation. XRP was designed to facilitate fast and low-cost cross-border payments, solving inefficiencies that exist in traditional financial systems. This functionality gives XRP a purpose beyond trading. He also explains an important but often misunderstood concept. A higher XRP price can actually improve the network's functionality. When XRP's price increases, liquidity improves, allowing larger amounts of value to move using fewer tokens. This increases efficiency, reduces friction, and makes the network more attractive for institutional use. From a market impact perspective, this means that utility-driven price appreciation is fundamentally different from hype-driven pumps. When price growth is supported by real usage, it tends to be more stable and sustainable over time. So, why does Aljarrah call market volatility short-term noise? Aljarrah dismisses short-term price fluctuations as noise, meaning temporary movements that do not reflect the underlying value of the asset. Crypto markets are highly reactive to news, sentiment, and macroeconomic shift, which often cause exaggerated price swings. He urges the XRP community to remain patient and allow the technology and leadership to do the work. In his view, those who constantly react to short-term volatility risk making emotional decisions that undermine long-term success. The market impact of this mindset is crucial. Investors who can filter out noise are more likely to hold through volatility, reducing sell pressure and allowing utility-based growth to eventually be reflected in price. So, what are the real drivers of XRP's long-term value? According to Aljarrah, the true drivers of XRP's long-term value include ongoing development, expanding partnerships, and clear strategic direction within the ecosystem. XRP's role in cross-border payments is already being validated by real-world adoption. Financial institutions like Tranglo and Japanese giant SBI are actively using XRP to support international settlements. These are not experimental use cases, but operational systems handling real value transfers. The market impact here is significant because institutional adoption reduces uncertainty. When established financial entities rely on XRP, it strengthens confidence and reinforces the idea that XRP is more than a speculative asset. So, how is XRP expanding beyond payments? XRP's utility is no longer limited to payments. Companies are now building reserves tied to XRP, signaling growing institutional confidence. Ripple's involvement in the Evernote project, which aims to create the world's largest XRP reserve valued at $1 billion, is a major milestone. And decentralized finance platforms like Flare and Axlar are introducing yield-bearing opportunities for XRP holders. Axlar has even announced plans to support XRP as a staking asset for validators, expanding its role within blockchain ecosystem. These developments have a strong market impact because they diversify demand. When XRP is used across multiple sectors, it becomes less dependent on any single narrative or market cycle. So, why do XRP spot ETF matter for the future? XRP has also entered traditional financial markets through spot exchange traded funds. At least 5 XRP spot ETF are currently trading in the US, and despite launching only last month, they have already attracted $1.24 billion in net assets. ETFs make XRP accessible to institutional and retail investors who may not want to hold crypto directly. This expands XRP's investor base and increases legitimacy in traditional finance. From a market impact perspective, ETF inflows can create sustained demand, reduce volatility over time, and help align XRP's price with its underlying utility. And my own personal opinion about this is that ignoring price entirely is unrealistic, but obsessing over it is dangerous. Price matters, but context matters more. XRP's recent struggles do not erase its growing utility, expanding partnerships, or institutional adoption. What makes XRP unique is that its success is not solely dependent on hype. It is being quietly integrated into real financial systems. For long term thinkers, this may be far more important than short term charts. If XRP's utility continues to expand, the price will eventually reflect that reality. The real risk is not volatility, but misunderstanding what actually gives XRP value. And this finally ends our video. Thank you very much for watching and see you on the next one.